Andy, how are you?
Good. How are you doing, Brian?
Not too bad, not too bad. What a crazy month it's been for crypto, huh?
It has. It has.
By
All
the way,
right.
are we
So
recorded yet, or are we gonna go in a sec?
yeah, I think we're definitely recording. We're definitely
Perfect.
recording. All right. I'll just go through the intros and stuff. So all right. So welcome everyone. Welcome Brian. Good to see you.
Good to see you too.
All right. So today is it's Thursday the 10th of March. It's probably Wednesday evening, 9th of March over at your side. Yeah.
Oh yeah, 6:30 p.m. over here on the West Coast in the U.S.
Fantastic. All right, and for those of you in Malaysia, in Singapore, we're Thursday, the 10th of March at 10:36 a.m. Okay, so hope everyone's doing well and everyone's staying safe. As usual, we always have a special guest, Brian Quinlivan from Santiman. Very big and warm welcome to you, Brian.
Thanks for having me, Andy. It's always a pleasure to be here, and I'm really looking forward to going over a lot of interesting metrics that we've seen over the past month as Bitcoin has roller coastered up and down with all of these real world events.
Oh yeah, I'm definitely looking forward to today's session. So look, if you're just joining us, good morning, good afternoon, and good evening to you wherever you're tuning in from. If feel free to share, like, and subscribe. Right, if you're on YouTube, make sure you click on the bell icon and choose all, so that every time we come on, you're notified. If you're on Facebook, follow us. If you're tuning in on Twitch, follow us. Don't forget to tag your friends if you know anyone who might be interested in this topic, right? And I think right now it's a pretty hot topic. Feel free to throw in any questions so that we can answer them um, at the next session, right? So at the next session, so we'll look at your comments and then we'll try to answer them at the next session. Uh, a few announcements before we get started. We have a crypto preview session on March the 17th. That's next week. So if you're interested to find out a little bit more about how to begin or start investing in crypto, leave a comment in the section, right? Just say class. Someone will get in touch with you or respond to your comment. We recently had a class in January, yeah, and it was a hit, right? We had quite a few skeptics that started on day one, and by day three they were orange pilled and they were all for it. So yeah, so look, I love a good challenge. I love getting skeptics into the class. So yeah, if you're interested, do type class into the comment section below. So the next class is happening April 8th to 10th. 8th to 10th. So if you're interested, do let us know. Okay, I think that should be the end of the announcements. Again, welcome to those of you who are just joining us. I am joined today by Brian from Sentiment. I will let Brian introduce himself, and over to you, Brian.
Great to meet everybody once again. For those who have seen me on this channel before, thanks for tuning in again. And for those of you seeing me for the first time, I am the content and marketing director at Sandment. My job is to both identify trends that are going on our data platform, where we cover about 2,000 plus assets through both on chain and social means. And then I also market those insights through our Twitter insights, all sorts of things. So we're a growing company that's gained a lot of traction over the last couple of years, um, due in large part to making a lot of correct market calls and seeing a lot of things behind the curtains that are happening on various blockchains that the public and TA traders may not get to see too much. So that's what we'll be doing here for the next, I don't know, 20, 30 minutes, Andy. And we'll kind of see how it goes. There are definitely some topics I can touch on. And by all means, feel free to ask questions about anything that our platform might be able to help provide some light on.
Yeah, definitely. And thanks for the introduction, Brian. So tell us. I mean, the last time you've been on was exactly a month ago. What's been happening, right? What's been happening on chain in the world? What's going on?
Yeah, it's been a ride, right? We had a month ago. It feels like it was a year ago now with all the things that have happened. We were talking a lot about the Fed and inflation and how that might impact the future of cryptocurrency, as well as, of course, equities and even gold and silver, things like that. And, when we were really at the price bottom for Bitcoin, I think we were around like the 33 to 34K level in late January. There were a lot of attributions to why the price was going down, mostly involving inflation and the very obvious correlative peg right now that Bitcoin and Ethereum and much of cryptocurrency has with the S&P 500. So when those prices really started to tank at the beginning of the year here in 2022, Bitcoin was kind of being dragged down with it. Some argue that Bitcoin is actually leading the charge and the S&P is following Bitcoin. I have my doubts about that, but my job isn't to provide opinions. It's more so to show what the data is indicating. And I can definitely share my screen and we can
Sure.
go into that. And then on top of that, we can talk about how the war, which was announced just about 2 weeks ago now, has
Yeah.
been impacting crypto itself in both a good and lately in a very good way. When it first was announced, it was negatively impacting crypto. So we'll touch on that too. And just to give everyone a little bit of context on how prices look, we have a pretty nifty and handy dandy screener here that you guys can always tune into. And if you sort by 30 days here, like I just did, and then go by descending market cap, you've got the top 100 or so, depending on how wide your screen is. It might go over or under 100. It'll show you the returns percentage wise of all of these assets. You can see, I'm not even sure what chain Bing is all about, but if we ignore that anomaly, Anchor Protocol has had a good 30-day stretch, Waves has had a good stretch, and Luna's had a very good stretch. But other than that, it's almost all a sea of red, maybe a few other positive returns around that time. But you look at Bitcoin through all that it's been through, going down to 33, 34K, going up to just about 45K, and now sitting here at about 40.9, it's down about 7% over the last 30 days. Ethereum down a little more of a severe number, 15%. And a lot of other assets are apparently following along, mostly with Ethereum right now. Ethereum tends to be kind of a peg for altcoins a bit, especially if it's an ERC20 project. But overall, it's been a tough stretch for traders ever since, really going back to the all-time highs that were made in mid-November, I believe November 10th and 9th, depending on where you are in the world, when we hit a little above 68K and almost 5,000 for Ethereum.
Yeah. Yeah, definitely. So yeah, so it's definitely been an interesting ride in the last 30 days. And you're right, when the last time we had this session, we were talking about the Fed, increasing interest rates and how it was affecting prices. And then, as you said, 2 weeks ago, the war started, and things have just been pretty crazy.
Yeah, they've certainly shifted. Those events have absolutely shifted the way cryptocurrency would have gone if those events never occurred, right? Some
Yeah,
argue there was already a little bit of fear of war baked in at the time that it was officially announced. And so I've
that's
made some charts here. Lately, we've been looking at things like the executive order that Biden made involving cryptocurrency. We'll get to that in just a moment. But first and foremost, let me pull up how the war situation has actually impacted prices. And if I type in here a few words, it's as easy as going something like war or Russia or Ukraine or Putin or why am I flaking on the president's name of Ukraine? Uh,
Zelensky.
Zelensky, yeah, and the spelling, I'm going to butcher that.
Yeah, we're
We'll
gonna have
leave it
to
alone.
Google that.
We'll pretend that Zelensky isn't part of this query. It won't change much. Don't worry.
Sure.
This is the beauty of live streaming, folks. So don't hate me for not remembering that name. Um, Social volume. So this indicates, based on just crypto platforms, how often these forwards are being brought up on specific crypto platforms that we have access to, and that is a very large, expansive amount. These aren't just niche little groups. It's anything public on Twitter, Telegram, Reddit, and on top of that, even though it isn't shown here graph-wise, it's also baking in Discord and a few other pro traders chats. So we can actually see, based on platform, how often these things are being brought up. Many of you are familiar with Google Trends and being able to do something similar. But the beauty of this on Santiment is that we're only looking at how much these topics are being brought up on crypto platforms instead of just random Googlers who have nothing to do with crypto. So this gives us a lot of insight because of the fact that we're able to see how these trends typically let prices play out following the hyped up intervals of discussion where they're really firing off frequently. And we can of course see that the highest moment that all of this was brought up was on the 24th, might have been the 23rd where you are. That's when, of course, Putin announced that Russia was officially declaring war on Ukraine. Everything skyrocketed. The prices plummeted. But interestingly, the reaction came a little bit delayed after it was announced right around here. So a few hours went by, and after the price really bottomed out and the mainstream crypto discussers really recognized that this was happening, that's when they started talking about it and getting fearful, going, oh my God, war, prices are just going to continue plummeting. And guess what happens when the mainstream figures out some sort of FUD related subject? The price goes up. And the reason is because crypto now and potentially even forever will always go the path of the mainstream's least expected direction. The same occurs with something like buy the dip or buy the dips. We can see this is not the best example because many of the mainstream actually called the dip here and were somewhat correct, not initially. So if I really zoomed in here, we could see that there was another dip after this major dip call by the crowd happened. And then after they eased up right here, this little bar, that's when the actual dip buy opportunity happened. This one's a better example. Many people called the dip here and said it's time to buy after this one, but then prices continue to go down until we had much less discussion right around here. And that's when the actual rise happened, at least temporarily. So, just a few quick examples of how social volume can be used. And now I'd like to get to the current situation, which is, of course, Biden's executive order. Everyone knows that the US and our regulatory systems here have a lot to do with the world prices for Bitcoin. At some point that may change, but for now, the US still has a large impact on the direction of prices whenever news comes out. And we can see that the way Biden's name has come up in the news, it's essentially been a reversal indicator, right? We see here a huge grouping of social volume, price goes up. Huge grouping of social volume. This, of course, happened when the war was declared, price goes up. Then here, more recently, just about a week ago, we see a few isolated spikes, and this called the top. I believe this was when the executive order was first being hypothesized on how it would go, right? So Biden is an interesting word to keep an eye on. We, of course, can also see the word executive, which is a little more specific to what this subject matter that happened yesterday pertained to. And we could see that this essentially worked as a top indicator where everyone said, okay, prices are surging because of the executive order. And then boom, the price starts to decline again. Doesn't mean it'll continue, but perhaps if these social volume bars continue to stay high, that means there will be a little more downside. So that's a good thing to keep an eye on.
That's a very good tip on how
Yeah.
to use the platform. Yeah, thanks.
Of course. And then order here, same thing, just one big spike, price goes down. You get the point. But that's a little bit about social volume, and I hope I didn't use too much time on that. But I just wanted to express the significance about how these real world events can and will continue to impact where crypto goes next with each passing headline.
Yeah, that's actually a very good example of how useful, this sentiment platform is, right? I mean, it's that the data is there. Now you're mining it and looking for patterns, and looking for, effectively, what happens to price, when social volume increases, or
Mhm.
what happens after, when yeah. Yeah.
Yeah, completely. And then, of course, we've got on-chain indicators to take a look at too. We can see active addresses. Uh, it's mostly been up and down. I can switch it to daily active addresses. That might be a little more appropriate here, but we can see that in the daily active address field, it's been a slight decline. This pink indicator is essentially a smooth moving average. Prices are, or I'm sorry, the amount of unique addresses interacting on the BTC network has taken a slight slide
Mhm.
ever since the all-time high that occurred here in mid-November. It actually topped out right at that all-time high too, which is something to note. Um, and then we can also look at the average trader returns. And this is an important one. This is probably a top three metric that most of our sentiment staff really regard to be an indicator with a lot of alpha. Generally speaking, we look for uh, we look for around negative 15% as the bottom ish for most assets, and when it falls below it, that is when we tend to see a big correction upwards. So something like this was a perfect example in late January when everyone was still talking about the Fed and inflation at the time. Uh, and as soon as it fell below, boom, bottom indicator. You would have had a great time uh, with your investments if you bought when all the other average trading returns were heavily in the red. Same here. Huge MVRV spike down. It got to as low as negative 19%. Actually had a little more downside afterwards, but as long as it stayed in the negative, you'd feel comfortable staying in your position. But as soon as it got positive, that would have been the sign to be a little weary that something could correct down, and that's exactly what happened. Um, so MVRV is a great metric to keep an eye on. And right now, it's pretty much back break even after having the big surge the last couple days and then the slight correction just in the past 10 to 12 hours, I believe. Another important thing to take a look at is supply and exchanges, which has encouragingly continued to just drop. I can even zoom out here and show just how crazy this has been. Over the last year, we look at where things were a year ago. 14.03% of Bitcoin was sitting on exchanges here. It got all the way up to 14.32 in mid-May before a huge plummet down, all the way down to where we are now at about 10.65%. So that generally is regarded as a good thing because with less supply on an exchange, there generally is less probability of a large sell-off occurring because there's simply less supply that is able to be exchanged. And when coins are moved to an exchange, there's only one action that can be, well, technically two. You can hold it on an exchange or you can sell, but you're not moving those coins onto an exchange to buy them because you already own them. That's why declining supply in exchanges is a long-term good indicator, or bullish indicator, I should say, if you are able to be patient and you're not so much of a swing trader as much as a hodler. So very good sign there. And another important metric to look at is exactly how many, let me switch this up, exactly how many Bitcoin are owned by a key tier of whales. We look at whales that hold anywhere between 100 to 10,000 Bitcoin as that key tier, because anything above 10,000 we have found to be mostly exchanges, but 100 up to 10,000 generally is that largest tier where traders are actually active and reacting to prices. Now I need to switch this to the price of Bitcoin, which I can put right there. And now we can take a look at how solid the holders of this particular tier of Bitcoin are correlating with the price of Bitcoin. So generally, something like this would be a perfect indicator that you want to be weary of prices dropping. And even though there was one more leg up high, because these whales were already dropping and dumping their assets onto smaller holders and traders, the eventual retracement that started happening was extremely swift and damaging to anyone that were still holding the bags. And that's generally what we see. Same here, on the other end. Huge accumulation in mid-June all the way to early August, and the price kind of lags behind. So that's why whales can be such an important and helpful metric. Now, where we are now, we've dropped all the way down to about 48.4% of the supply held by these whales, and that's relatively low still. So prices essentially stayed about even with that. We'd want to see a little bit of a pickup of that pink line while the price stays down, and that would be a very, very solid sign that the prices are going to start to turn around and you can be confident in buying what is still considered to be a long-term dip that's going on right now. So I'll take a pause there. I know we're probably close on time already, Andy, and I don't want to take up this whole stage talking and just giving a metrics update. So feel free to ask a few questions if you'd like.
Yeah. No, that's good. I think maybe a few things I'd like to highlight. If you're new to this, if you're new to on-chain metrics, if we go back to the previous one where you were talking about, that's right, the supply on exchanges. Now, for a coin like Bitcoin, where there's a limited supply, 21 million. Well, technically, a lot have been lost over the years. So I think James from Invest Answers, he did a calculation where really there's only 14 million in supply, where quite a number have been lost. And if that were the case, when you look at the supply left on exchanges, uh, and it's a coin with limited supply, that's very bullish because there's only so many. And if they're not on exchanges, well, then the big hodlers are holding on to them and they're not selling. They're keeping them away from the exchanges, which means the lower the supply, if a sudden surge of demand came in from the general population, or noobs, or people who suddenly had the epiphany or had the aha moment, oh, I have to get some Bitcoin, well, then there's only so much supply on the exchanges. So good luck trying to get it cheap.
Yeah, well
So
said.
yeah. Thanks for that, Brian. I just wanted to highlight that. And I think what you shared on that metric after that, that was again, really insightful. Because you look at this day in and day out, it's just it's just normal to you. But to folks who have never actually seen on-chain metrics, this is amazing. And again, I come from the traditional space, right? In stocks and equity. So if you actually look at the amount of transparency and information that's available out there, if you were to use a platform like Sentiment, you gain so much more insights into what's actually happening. It's even more transparent with all because in equities it's a very regulated space, and I've heard so many things thrown at crypto, but if you take the time and the effort to look at the metrics and the information that's available, it's actually very transparent. It's more transparent than you think it is. Even though there's regulators are trying to figure out how to work through set regulations in different jurisdictions, but because the blockchain is so certain blockchains are so transparent, you can garner so much information from there. All right,
I
Brian.
agree. I
Yeah.
really agree. And on that point, we just put out this tweet about about an hour ago that reflects just how close crypto is pegged to equities right now, specifically the S&P 500. The green line here is Ethereum, which
Uh-huh.
is actually pegged closer, interestingly, to the S&P than Bitcoin right now, even though that hasn't always been the case. But you
Okay.
can see just how close this green line, maybe this part is a slight exception, but
Yeah.
overall, it appears as though there's some leading indication that's happening from the S&P 500. Uh, by like these areas where like the S&P is flat, that's when they're closed, and then you see the crypto trying to edge higher, and then
Yeah.
by the time the markets open again, there's a big
Mhm.
drop in crypto to catch up. So I find that really interesting too.
Yeah, yeah, that's interesting correlation.
And gold too, doing the exact opposite of both. Look at
Yeah.
this gold line here compared to the green line. It's like they're mirrors of each other at the moment.
Yeah, well, that's really interesting. So if you have a diversified portfolio and you're looking to hedge your portfolio against a very heavily weighted crypto portfolio, you know what to do. And this is obviously what I forgot to mention right at the beginning. None of what we talk about today is or should be considered financial advice.
Yeah. I can
It's
say
it,
historically, despite it not being financial advice, generally in times of volatility and real world crises, such
yeah.
as a war or Fed uh, inflation fears, that is when hedges and things like gold tend to be this to this extent reflective against some like crypto or the S&P. So it won't always be the case. Like if the war ended tomorrow or
Yep.
Fed and inflation fears ended, then this would look differently. But for now, there's a very good explanation for why this looks the way it does.
Yeah. Yeah, definitely. Cool. Now, thanks for that, Brian. All right, I'll the floor is yours again.
Yeah, I mean, look, we can go a little bit longer if you'd like, maybe wrap up in 5 minutes, but I can definitely show a few other things to you.
Sure. I think we have we've probably got a good 20
Oh, perfect.
25 minutes. Yeah.
Yeah, let's dig into plenty of stuff then. There's a lot we can unwrap here.
Cool.
While we are, let me see. I'll take a look at this model next. So this is our funding rates model. And what this is essentially doing is measuring the average funding rate, whether people are going overly long or overly short, uh, in showing just how much people are putting their money where their mouth is and betting either for an asset or for the asset to go down. And right
Hmm.
now, things have mostly neutralized. These red dots here show what the funding rates looked like 8 hours ago. Blue is 16, and you'll see some green dots reflecting 24 hours ago.
Hmm.
Mostly things were quite short 8 hours ago, but a lot of those shorts have been liquidated, uh, or they just decided to, because I know that these past 8 hours, the price went down mostly.
Hmm.
I believe that they probably just closed their shorts at small profits, but usually you'll see funding rates neutralize because the price ticks up really quickly and liquidates a lot of shorts. So that still could have happened, even though prices have kind of actually gone into favor of those funding rates.
Yeah.
Most of the time, you'll see that whatever the edge is between, people shorting too much or people longing too much, the opposite comes true, just like we showed with some of the other social metrics that we covered. Um, you can see, there are a few up here, but these aren't necessarily huge positive funding rates. 0.01 is just around the default anyways, or just above it.
Hmm.
Um, so we're pretty much flat, even though if we looked at things about a week ago, or even like 3 to 4 days ago, we were seeing a ton of green bars here. And to prove that, you can see that all of these faint bars, these are the lowest the funding rates have been for any of these assets over the last 3 days. So this is just pulling the last 3 days hour by hour and showing what the minimum funding rate is or the maximum funding rate. So you can see very clearly through the shadows of these bars, people were shorting like crazy. And then this big uptick that of course happened today as the S&P climbed, that liquidated a lot of people. So the funding rates can be a very, very fun and important metric to keep an eye on to see when the crowd is getting too overly greedy or too overly fearful about cryptocurrency. There's also another perspective here where you can look at the average funding rate of Bitcoin, which is illustrated in blue, and then the average funding rate of all the altcoins combined that are within about the top 100 or so. That's what this model is following, at least those top 100 that actually have funding rate data, excluding like stable coins, for example, which wouldn't really be relevant data. So we can see that, there was a big uptick here, kind of a downtick here. So especially when the Bitcoin funding rate starts to go negative like it was pretty much exactly 24 hours ago from the time of this recording, this would be a good sign that people were starting to get way too fearful because they saw this uptick and decided that this was a top and it couldn't possibly go too much further. Instead, over the next 1, 2, 3, 4, 5 hours, all the way up to like 12 hours later, the price went higher. And by that time, people were actually longing like crazy. So we want to look for extremes really and see when people are too short or too long on Bitcoin or altcoins. It's mostly started to stay pretty even, but a few weeks ago we were seeing dots way down here for both Bitcoin and altcoins. Everybody was shorting like crazy, and for the most part, it's chopped over the last couple of weeks. In fact, obviously we talked about Bitcoin being down 7% over the past month. The past 2 weeks, it's been kind of like ranging anywhere between 37K to 43K, I think at most. So that people who are trying to leverage long and leverage short, they're probably just pulling out their hair waiting for something significant to happen. And maybe that range is enough for them to be happy about the significance of it. But in my opinion, it's kind of frustrating everyone that Bitcoin can't really make up its mind whether to break out of this band or not.
Yeah. That's another interesting insight and a very useful one at that. Thanks for sharing that one.
Absolutely. And another model that I can show would be our NVT, essentially divergence model that compares the current market cap of Bitcoin versus the amount of unique Bitcoin that is circulating on the network. So it's kind of taking circulation, but equalizing it depending on where the price of Bitcoin is at that given time. Because of course, price, give or take, roughly matches the market cap at any given time. So what we tend to look for, it's pretty intuitive. There's 5 different colors that display month after month to resemble whether we're super bearish based on not enough circulation happening, like this stretch, or we're getting, semi-bullishness here, or even uber bullishness like we saw way back in 2017, the last time we got these really, really solid green bars. However, we have seen that even on the yellow-green semi-bullish bars here, that's enough to really kickstart Bitcoin on most occasions. Now, many of you might be looking at the last 6 months and going, well, then what the heck, right? We're kind of on a downfall and volatile path despite us being in semi-bullish territory. Well, eventually that tends to even out. It's not quite as going to be as correlative like as, back in 2019 or 2018, where as soon as we went red, the prices just gradually fell. There's way more major players now that can cause a lot of volatility in the markets, no matter what the fundamentals, especially on the utility end, look like. So if there's not enough circulation, but whales are buying like they were here, that can still push up the price. If there is a lot of circulation, but whales are dumping like they have since October, that can cause prices to be volatile and go down, even though we're getting a fair amount of circulation. But eventually, things even out. And if you're seeing this long-term semi-bullish indicator for the past 6 months, it's generally a good sign if you hang on. It means that there's a limit to quite how much damage can be done when the circulation is seeing a healthy amount of utility like we are right now.
This one's interesting, Brian, as you mentioned, because I'd say since 2020 was when a lot of the institutions had come in, and so big money have come in, and prior to that, so you almost see an evolving, um, you see the reaction of well, based on price evolving over the years, where in 2017 it was mainly retail investors who were in the market, and so as you said, because there was a lot of circulation, that the super green bars there, it went as the model showed, and then um, when it came down in the red, was it in 20 June 2021, price went up from there, even though there was low circulation because big whales came in to buy. So you almost see an evolving space here where, as newer players come into it, um, you, you 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 have different, um, uh, what would you call it, just different, an evolving nature of the beast, really.
Absolutely. Yeah. I think if anything, it's not so much that things are more inaccurate and unpredictable now with a model like this. It's that it just takes longer for something to develop. The last time we saw like a clean signal was probably October, where, prices were going down while it was
Mhm.
red. And as soon as we turn green again, boom, we get an all time high there and
Yep.
even an all time high here. Um,
Yep.
but then the last 4 months, we've stayed relatively healthy in the circulation, but things have dropped. And I think that's due to whale behavior and real time events affecting it.
Yep.
So if you can stay dedicated and patient with
Mhm.
some sort of long term model like this one that Sentiment offers, I
Mhm.
think it generally leads to good results, and I would stand behind it.
Yeah. Yeah. That's really cool. Cool. Thanks, Brian.
You bet.
So, what's next?
You tell me. Yeah. I mean, let me know
All
if
right.
there's like a certain asset that you'd like to
I
check out for the last 5, 10 minutes here or something like that.
Yeah, yeah. Look, definitely. Look, I think we've probably got about another 15 minutes. Let's. So I have my two favorites that I'd like to look at. Could we take a look at Litecoin and Ren?
Let's check out Litecoin first.
So I've got okay, so I've been I'm a huge Litecoin fan because I mean I know that the whole thing about Charlie dumping on the at the all time high and all that, but really if you look at it, if you look at its utility purely on its own, it's pretty much like Bitcoin, except it's got a few things modded into it, right? It has 4 times as many coins. It's got 84 million coins. Each block is 4 times faster, so every 2.5 minutes a block gets produced, and it is much cheaper to transact on chain at layer one using Litecoin, and it uses script mining instead of SHA-256, so it doesn't compete with Bitcoin. So it's quite complementary in that sense. And what's interesting, what I see really interesting is that you know from the chart that you've got here, even though the daily active addresses it looks like it's coming down, but if you look at the long term, it's kind of grown, hasn't it? Like over the years.
Yeah, what I've really found interesting is more recent times. So I just zoomed out to 2017 because you mentioned the Charlie tweet that I remember myself the day he put it out because I was first getting into crypto maybe right around here, mid 2017.
Hmm.
And Litecoin was something that had done really, really well on that huge bull run that topped out in mid December for some. I know Ethereum topped out in early January of
Yeah.
2018, but regardless, I know Litecoin was a popular one, and this was somewhere around here. One of these 2 3 days was the time that Charlie got out. We
Hmm.
had one more spike in daily active addresses, and then people essentially gave up the dream as markets crypto wide all dropped off.
Yeah.
But what's interesting is more recent times. I'll just do something like the last. We'll do like the last, I don't know, 12 to 14 months or so we can see more closely. I think this is a really good sign where we see daily active addresses going up here while prices were sliding. That's a bullish indicator to me because it means that the utility and the amount of unique addresses that are actually transacting their Litecoin are moving up despite the suppressed prices that we're seeing right now. I think that it's something to keep in mind along with the circulation. My puppy is barking at me, so I apologize for that.
That's all right.
And to look at circulation really quick too, we can see that it's mostly been moving up. So this is a great sign. Maybe looking at just the last 3 months. Yeah, I mean, there's a legitimate move up in circulation here that I like to see. So that's a nice sign along with this chunk here from February where daily active addresses were really starting to move up. Now, as far as average traders go, it appears that on the 30-day time scale, they are in the red, which is a good sign. It means that there is a specific amount of loss that can be bought into for a lower risk than usual. And I think that would be a nice sign for Litecoin as well. One other thing to look at would be Litecoin's whales, where we're seeing anywhere between. I'm just going to put this puppy on my lap. He's nipping at my legs right now. Come here, buddy. Everyone say hi to Griffin.
He's cute. What is he?
He is a mini schnauzer.
Ah, cute.
3 months old. So Griffin wants to know how the whales are doing for Litecoin, and I'm going to tell him. With prices sitting, oh my goodness. What we're going to do is put him, excuse me, everyone.
That's it.
All right, so whales. If we're looking at an asset that's valued at around $100 right now, we generally want to look for holders that are holding around $100,000 to $10 million USD. So if I do that math, we're looking at something like 1,000 times 100 would be $100,000, all the way up to right around there. We'll do these two groups. And it's not looking great. So I'll even zoom this out to the last year. So relatively speaking, it looks like whales really hit their top on October 22nd. And even though we had a big local top here about 2 weeks after that, the fact that they were already starting to dump, yes, we had one more big spike here because they accumulated at the bottom to try to see if there would be a bump, and then they dropped off again.
Yeah.
It looks like they've mostly been declining ever since. Now, they still aren't anywhere near where they were the first half of last year. And that's a good sign. But I would be weary of the fact that they aren't really accumulating right now. And after owning at a high about 31.9% of the supply, they're down to a modest 30.4 now, which may not sound like much, but when you talk about the entire supply of Litecoin, 1.5% is a lot of millions of dollars.
Yeah. That's interesting.
So yeah.
Would that also signify that if the whales are dumping, so we would have more retail distribution?
Yeah, that's a good question. That would probably be best answered by looking at the daily active addresses, just to see how much more overall activity there is amongst unique addresses. And obviously we have seen that big uptick here despite the suppressed prices. So I'd say there is evidence of that. It would be nice if we didn't have this current drop off that we've seen over the past 2 to 3 weeks. But all things considered, that's probably the case. We can even look at a few other tiers, right? We looked at we looked at, where is it? Oh, I see it's over here. So we looked at 1,000 to 100,000 over there. But if we looked at like the tier right below it, 100 to 1,000 Litecoin, they're staying low right now.
Yeah.
We look at 10 to 100, they've actually been accumulating pretty hard, which is quite interesting. So if we look at just how the 10 to 100 holders correlate with the price, not very well. If anything, the people who take a gamble on Litecoin for a few $1,000s,
Yep.
they've been mostly wrong. So like the accumulators from January 21st up until now, they've watched the price go down as their holdings went up. So they're hoping that, this is just a really long-term dip right now. But you can see how much they dumped off here back in April. This was when Bitcoin had its first all-time high too, of 2021 that was. But they dropped a ton of Litecoin here prior to the price going up. So this could almost be looked at as a counter indicator, but it does show evidence of exactly what you were theorizing, Andy, of more accumulation happening and dispersal of addresses over time to other smaller addresses. So like 1 to 10 kind of rising as well. Interesting that this tier is dropping 0.1 to 1. So that's like the, $10 to $100 tier.
Yeah. Yeah.
But I think
That's
there's so much alpha and fascinating things you can find by looking at that holder distribution chart.
Definitely.
And just to make sure we have time, I'll give you a quick recap on Ren.
Sure.
It does appear as though we just had a big spike in circulation. In fact, it was the biggest we saw. It was even larger than the one in May, so I'll have to go back a couple of years.
Wow.
So the last time we saw a circulation spike this big was February of 2021. So we're looking at just about a 13-month high in Ren moved. And it does appear that these spikes in circulation have correlated with bottoms, like this one last in late January, and this one that happened just a couple days ago. Prices react positively to these, and even this one to an extent, it was a bit more of a delayed effect, but the circulation spikes tend to happen after prices have been suppressed, and then you see an evident uptick either immediately or a few days later. This was a great example. Prices moving up on the spike. This one's an okay example. Obviously the price moved down, but you get the idea. I think circulation plays a large factor for an asset like Ren. That's in that, I don't know what the market cap rank is, but it fluctuates between like the 30 to 80 range. So it's definitely interesting to see that. Daily active addresses, on the other hand, not a lot of encouraging signs here. There's only 280 to 320 daily active addresses a day most of the time. We'd like to see that start to grow once again. Back in September, when Ren was going on a bit of a run, we were at least seeing a few big spikes like this. We wouldn't always necessarily need to see huge spikes, but something that kind of shows that more addresses are specifically getting into Ren without just the general crypto sphere all growing together. MVRV, it does look like average traders are up a bit, up about 12.5%. I'll zoom back in here just the last 3 months. So yeah, it is up again. This would be a slight local top indicator, what we're seeing right now. It actually is, now that we're zoomed in, it's at 18.7%, which is pretty significant. Supply and exchanges is looking pretty good. It had been dropping for quite a while. It's interesting that, it dropped right until around the price bottom, and then prices began to rise. So that's fascinating to see. And then as far as supply distribution goes, with Ren at a little over 40 cents, let's see, we'll take off these. We'll look at just the percentage supply held. So let's say we're looking at the 1 million and up crew. Kind of flat. Let's try to take off the infinity, because the reason we try not to go that high is so many of those holders at that level are exchange addresses,
Yeah.
but this one probably not as much.
Mm-hmm.
And it's painting a not so great sign ever since prices started to rise. They were holding at about 39.6% of the supply a little over a week ago. Now they're down to 36.1. So these whales have dropped about 3.5% of the supply just in the past week. I'd be concerned about that. It doesn't
Yeah.
necessarily mean the rally is going to stop, but those key stakeholders that can really control the price, they're telling us that they've kind of bowed out or at least taken some profit.
Mm-hmm. Mm-hmm.
And then as far as anything else goes, exchange flow balance, nothing too crazy there. We did see a huge network realized profit loss spike just 2 days ago. What this means is the total profit or total loss on the network, someone sold their bags at a massive loss here, massive, 31.09 million. Uh, it looks, I mean, it's easily the largest spike of the last 3 months. If we went to the last year, still the largest spike,
Wow.
largest 2 years. Yeah, this might have been like maybe Ren's
Wow.
biggest network realized profit loss spike ever, going back to 2017. I think it is. I think it is. It's hard to tell when it's this zoomed out because there can be some misleading data right at the end. But yeah,
Yeah.
overall, it looks very likely that that spike from a couple days ago is the biggest loss uh, that was recorded in a long time. And I, I think I think that was a really good bottom indicator. What we're seeing here, probably better than any other metric we just looked at, because when these bottom spikes happen of this significance, the loss has to be compensated for by a price rise eventually. And if you buy at these spikes, you'll generally come out ahead. Just as if you sell at these top spikes, or at least take some profit, you're coming out ahead most of the time too, and making a wise decision there.
Wow, that's a massive spike down.
Yeah, it's crazy. It really is
Yeah.
crazy.
Wow. That's the biggest, right? That we've seen
Yeah,
historically
yeah,
for Ren. Yeah.
it looked like it. And then, you can even look at development activity where Sentiment scrapes the amount of GitHub submissions.
Mm-hmm.
It ignores really mundane submissions like a Slack update or something that might show up in the GitHub, and really only focuses on the ones that are notable. So lately, let me zoom out a little bit. It looks like there has been a bit of an uptick, but Rent's development activity doesn't look the greatest. It's
Mm-hmm.
not looking awful by any means. We don't like, as long as it's not showing like zero development activity or barely, a few spikes, then it's fine. But over like a year, we generally like to see a steady rise, showing that the team is getting bigger and there's more and more innovation.
Mm-hmm.
That's not quite the case right now, which is a little surprising because I like Ren too. I think it has some potential as a very unique technology.
Yeah.
But it has seen these interesting little lulls, which could be just, the team's on vacation and nothing more, or it could be something more substantial. But
Yeah.
if people wanted to go into the GitHub and see what's going on, there
Yep.
would certainly be some specific details as to why that drop off happened.
I wonder if it's because Ren's kind of where they are right now, and then whether or not the teams helping the other teams on board onto Ren level, layer one, because effectively Ren has gotten themselves to a point where they have Ren JS and Ren VM, where effectively they transform themselves into an interoperable layer one solution. So uh, I think there's a couple of projects. One's called Catalog, and the other one's called this one's a separate project called Varen X, where they use Ren, and it's an interoperable DEX uh, running on top of Ren layer one. So it's interesting. I wonder if the market has recognized that yet, or and maybe we're looking for more projects to onboard and start using the Ren Layer One as a smart contract platform for interoperability, because I think they've already connected out to seven chains. So it's going to be interesting to watch this one.
Yeah, I mean, you're by far more of a Ren expert than me, because I kind of keep more of a I keep an eye on the general markets a little more, even though Ren is one that I've seen great things about and stories written about it. But I think your theory could absolutely have some truth to it, and be an explanation for why we've seen some of these fluctuations.
Yeah. Yeah. Anyway, look, hey, Brian, thanks so much for your time. And I know it's getting really late, and you've probably had a really long day. So thank you. Thank you for jumping on. Thank you for being with us. Appreciate you taking time out. And it's way past your dinner time. So I'm going to let you go. And I just want to say thank you again. And last words from you.
It's been a pleasure, Andy. It's always a blast to come on and talk metrics with you. And if your community ever wants to have some specific assets to look at, and you send them my way in advance of the call, I can prepare some specific charts so we can kind of dive deep into what those assets look like for your community. I think it's always a lot of fun. And if people want more explanations just about the general metrics and how they work, that's something I can do. And of course, I'm sure you've mentioned this to your community in past calls. Anyone who comes to santiment.net and adds the code Equities Tracker when they get a membership, they get, I believe, 25% off of their first month. It's already quite affordable. Some of our competitors are hundreds and hundreds of dollars. Ours starts at 44 bucks a month. And we feel that not just us being cheaper, but the fact that we offer more metrics than any cryptocurrency site on the planet, not just for the sake of being more, but actually good metrics, is a pretty good reason for why I stand pretty proud behind this company. And I really encourage anyone to check it out and see what's going on with the markets behind the hood, and improve their trading right away.
Yeah, definitely. It's a fantastic platform, and that's why we choose to work with Sentiment. It's definitely the best out there. All right, Brian,
Thanks,
we're
Andy.
not going to hold you back anymore. Thank you so much for coming on. We'll see you the next Tuesday of next month.
Yeah,
Thursday,
absolutely.
Thursday. Sorry. Yeah,
Yeah, no worries. I look forward to it, and I wish you all the best, and stay safe out there.
yeah. You too. Thank you, Brian.
Bye, guys.
Bye bye.